Welcome back, guys, to another roundtable. My name is Adam Victor Ruslan. Once again with me. Thank you for joining us on this roundtable. So previously, we talked about, there was one roundtable that we did that we were talking about how to find multibaggers, part 1. So this is going to be part 2. And in that previous video, we were talking about pricing power.
Yes.
So if you check out our previous video on that pricing power, we're talking about how pricing power in a company is kind of like a clue that they kind of have like an economic moat that allows them to raise prices. All right,
without affecting their business.
Correct. And that makes for a pretty good investment.
Yep.
And beyond pricing power, we also want to have another component which goes along with pricing power, which is scalability. Because no point charging high prices, but you don't have the scale that goes along with it. So in this video, in this roundtable, we're going to talk about scale. So when we talk about scale, a lot of people think it's just about being big business, as big as you can. But I think there's a little bit more that goes into scalability, and we're going to discuss that today. All right, so let's introduce scalability and really explain and define what scalability really is.
Okay, so to put it in a simpler way, right? Let's talk about medical doctor business.
Yeah.
So I always ask myself, in that 1 hour, how many patients can the doctor serve, right? So if you calculate, it's about maybe at most 5 or 6 patients.
That's actually pretty fast, man.
Yeah, that's pretty fast. Then I think probably it's like
I don't know what the doctor is
3
doing.
or 4 or something like that. Okay, 3 or 4. Okay, so that is the max they can do for that single hour. And of course, the single doctor won't work 24 hours, right?
Yeah.
Then if you compare it to a Starbucks business, right? In that 1 hour, how many people can buy, the Starbucks
cup of coffee,
right?
Yeah.
So there's the business itself, that one outlet can serve a lot of customers in the single hour as compared to the medical doctor business. So that in terms is what I call much more a scalable business as compared to a medical doctor business. Then we have another type of business, which is the software business, right? Like companies, our platform business like Amazon, right? In that 1 hour, how many customers can Amazon serve? Right? Millions or maybe unlimited. There's no cap to it, it's uncapped. Right? So you can see the scalability forms in a way of the first one, which is the medical business, is a service type of business. As it goes to the product business, it becomes more scalable. And it goes to the software business, it becomes much more scalable than the rest of the other types of industry.
Yeah, so scalability isn't actually just about size.
Yep.
It's about the type of business model that actually allows you to grow much bigger.
Yep.
So like a medical doctor, how many patients can you see in an hour? Not many, right? There's a limit to the amount of time that you have. And then it comes to a Starbucks, it's actually a physical product, easier to scale. But there's a little bit of service that goes into that as well, right? Because you can make the coffee and all that. It's kind of limited in the amount of cups of coffee you can sell in the Starbucks.
And I think they can also open new branches, and they got a lot of branches, right?
Yeah, that's how you can scale the thing. And then it goes into more physical products that you can just scale. And then it goes into software, which is unlimited in a sense. Because it's like, there's nothing that holds you back. It's just code.
Yeah.
You
So
just
your
duplicate.
business must have the scale first, right?
Yeah.
Then after that, then you have the runway, right? You get the growth, you expand. But if you do not have the scale, it's very hard to expand.
And when you talk about scale, it's usually because you're looking for growth.
Yeah, correct.
Because if you want to look, you say, I'm a growth investor, I want to look for multi-baggers, what you're looking for is growth. And part of that growth will come from scale. How big can the business grow? And it's not just about, so now we're discussing, it's not just about the size, but it's the business model. So not to say that Starbucks is a bad business, actually it's a great business, but compared to an Amazon, it's less scalable.
Correct.
So the limit is a bit lower, but still good business, right?
Yeah, because traditionally you still need a lot of capital to rent a place. You need to put a deposit with the landlord. So those require a lot of capital, right? Again, Amazon, they require data centers and all that, which also has a heavy. But like what Victor said, they can actually accommodate to millions of people or hundreds. So sometimes there are prime days where you got a lot of customers coming in at one shot. They can serve those without a problem.
All right. Yeah. So let's talk about that. The next part where you talk about capital, because like for Starbucks to expand, you open stores, it's a bit expensive. But when it comes to something like Amazon, I know you said they have data centers, that's pretty expensive as well, warehouses and all that. But it's still cheaper than owning a retail chain, right? In a sense, right? So that it's the business model allows them to invest a little bit of capital to expand and scale a lot much faster. Is that correct?
Yes, yeah. So actually, if you look at the last 20 years, right? Look at the top 10 largest company in the US, right? For example, in 2001, you have companies like GE, Microsoft, Exxon, Pfizer, Citigroup, Walmart, and the list goes on, right? So if we look at the companies that we have in the US, the top 10, the companies can have totally changed. Okay, so you look at the apply this scalability on the companies that we have today. You look at the top 10, you're looking at the Apple, which their business model actually asset-light in nature. They don't really manufacture their own iPhone. They actually sub it out to TSMC, and then they get Foxconn to assemble the phones for them, right? And of course, you also have Microsoft, which still stay number 2 as of today. Number 3, you have Alphabet. Again, they're also a software type of business. They are hosted on the clouds where you can do your search and all that. And then of course we have Amazon, which we just talked about it earlier on, and followed by that is Facebook, Tesla, Berkshire Hathaway, Visa, and then the list goes down, right? So the big difference between 20 years ago versus now is that the companies that are actually a lot bigger today are those companies that are asset-light in nature, right? And versus in the past, traditionally before internet become very popular, or rather smartphone, the traditional industries like your oil and gas, ExxonMobil, the one that actually dominate the most, right? But those businesses requires a lot of capital. Okay, if you look at the business model of ExxonMobil, look at the industry, that the amount of money they have to invest on the upstream itself, they need to invest in E&P, right? Explorations and production. Those actually, especially on the sea, you need to put a rig on that. That costs tons of money, right? Hundreds of millions, if not billions.
Billions.
Yeah, and
Yeah.
So that itself, I think it requires a lot. So the more that they expand, the more money that they needed, right? And then of course they also have to invest in refinery, and of course they have chemical business. All this actually adds up. It's actually a very capital intensive business. If you look at their total asset in their balance sheet, right, you can see the ExxonMobil fixed asset alone account about 227 billions, right, which is big, right? And if you look at the total assets that they have is about 332 billion. Okay, so that gives you a percentage of around 68%. So all their assets, most of it actually fixed. Okay, so that is the kind of amount capital that requires for them to get additional
just to
sales.
operate the business, right?
To
to run the business.
Yes. On the other hand, I mean, it's not an apple to apple comparison, but if you look at Google, for example, they probably they can start this business from the garage, right?
That's what happened, right?
That's what happened to Google, right? And then they founded the business, and people started to search more as more people own the computer. They don't have to give computer to other people. People buy the computer themselves, and they can just simply, in the early days, right? They can just simply go and do a Google search, and Google can start to monetize it through advertising, other clicks, cost per click or cost per impression. Okay, so that alone, as a scale, of course, Google need to invest in data center. But they can serve so many millions of customers in the early days, and today they are serving billions, right? And so they can take the kind of loads that and if you look at the the fixed asset that is required for Alphabet, the company, you look at the balance sheet itself, a lot of their assets actually mostly in cash and market securities, right? Which is their investment. But if you look at the fixed asset alone, it's only 85 billions against their total asset of about 320 billion. Okay, and that will give you a percentage of about 26%. All right, so that Alphabet actually generally require lesser fixed capital to grow the additional amount of dollars, right? So if you look at these two businesses, right, let me give you an analogy, right? So if you look at the two companies, right? So let's say these two companies both earn about $1 million each, okay? And company A maybe requires a fixed asset of about 10 million. Company B requires more capital, 20 million. And if you look at, let's say apply these two companies, both have the same amount of demand, right? And they can generate additional 1 million. Okay, so company A just need to come up with additional 10 million. Company B need to come up with another 20 million to generate the same amount of $1 million in terms of earnings.
Yeah, so it's a lot slower for the second
company
company,
B,
right?
because you need more capital to grow.
Yeah, so I think that's what Victor has pointed out. I mean, before the internet came along, everything was like the old economy.
Yes.
Right. So old economy, you need a lot of expensive stuff to kind of grow the business. But
so
now it's different.
I think that's basically what Bruce mean also saying. We compared with the 20 years ago, right? So the 20 years ago, the companies are generally the more capital intensive companies, right? More industrial companies, right? And in the old days, if you read Peter Lynch's book, he says that when the company get too big, it's very hard to grow 20% continuously. Yeah. But then now you are seeing all those large cap, mega caps, they are still growing at 20%, even though they got very huge.
It's crazy,
because their capital investment, their business model is totally different from the past. In the past, if you are still living in the past, of course, that still makes sense. But right now, a lot of the companies, right, they are really turning into asset-like companies. So you look at all those Singapore companies right now. I mean, the government is now trying to turn all those capital-intensive business into asset-like at this moment, right?
I mean, a good example is CapitaLand, right? They're
Yeah.
trying to they've restructured the company
Correct.
into a more asset-like business model.
Yeah.
That kind of makes sense.
So of course, we can't ignore the hardware kind of business, especially if you come to chips. Right? I mean, China is investing heavily on building their own reliant chips, so that they don't rely on third party. Right? So that hardware itself, of course, it doesn't really give a good return on investment, but it makes sense for them to invest because it's more like a national service rather than a good investment.
All right. So just to say, it's not that capital-intensive businesses are bad businesses. They're also good and great businesses there. It's just that you just have to be aware that when it comes to growth, it takes a bit longer.
Correct.
Because you need more capital to grow. Whereas if you look at a Google, it's so much more easy to scale, and that's why the growth is so much faster. And that's all because it's all possible because of the internet today.
I mean, if the company is growing, I do not want them to return capital to me.
Yeah.
Right. I want them to continue to grow, increase the return on invested capital, right?
Yeah.
So actually, you look at the performance for Alphabet and ExxonMobil, right? Over the last 20 years, of course, Alphabet only got listed in 2004. The returns between ExxonMobil and Alphabet, I think the gap is so big. And if you look at the Alphabet return, I think as of today, we are looking at almost 50 times of return versus ExxonMobil. I mean, if I didn't include the dividends here, but if you look at the return, it's only like less than 100%. If I include dividend, maybe probably will get up to 100%.
But probably not like you say in the Apple's comparison because Google was such a small company. It's like a smaller base. Grew up, but then it just still
brings the point of how scalable Google is.
How fast it has grown in the amount of time.
But the thing is that both of them have the same amount of assets, 300 over billion, or roughly the same.
Very close. Very close.
But yet one is generating more free cash flow as compared to the rest. Right?
So even though Alphabet have a lot of assets, right? Actually, a part of it actually in the form of cash and also investment. All right.
Okay. So I think Rusmin has pointed out a quick way to kind of like have a look at how capital intensive a business is. Just take a look at the balance sheet, how much of their fixed assets they have compared to the total assets. That's one way to look at it. And I think I think there was a when we were talking about the top 10 companies in the US today, a lot of the names that you pointed out are famous names like Facebook, Google, Amazon, Microsoft, Apple, stuff like that. But was one name that stood out,
Tesla,
which is Tesla. And I want to talk a bit about Tesla. So Tesla, do you think? I mean, when we talk about Tesla, people think it's a multi-bagger, and it's gone multi-bagger, right? People who got in early, they made a lot of money. I love the car. I'm so excited to have it in Singapore, actually. Saw a photo of that Tesla place in Singapore. I was in Toa Payoh, I think. So I'm happy. I mean, great car and all that. So Tesla, people will think it's a growth company, but would you think that Tesla is actually really scalable when it comes to the business model, stuff that we explained so far and discussed so far?
I mean, if you compare the fixed asset, I think Tesla fixed asset is about 57%.
Okay.
Right. The ExxonMobil is about what? 60
over
percent.
Okay.
So they're generally, I wouldn't say they're generally on the high side towards the capital.
Because it's an automaker, right? It's a factories and you make cars and all that.
So traditionally, I think all the automakers, they are also consider capital intensive business, right? So Tesla is no exception to that. But of course, they differentiate themselves differently, right? I mean, if they could, sell the software, scale the software, because this is the autonomous driving, where if they can actually crack the code and they start to, sell it to other automotive manufacturers, then that will be a game changer for Tesla, right? And the other part, of course, will be battery. So battery is something where I think is traditionally, there's no much innovation on that, right? So if they could, potentially continue to reduce the cost of battery and, give it to...
And not just that, the fast charging, because right now batteries can charge in like at least 30 minutes for 80% charge. But if you can do it in like 5 minutes, that's a game changer. Because you just go in, bam, go to it's like going to the petrol kiosk, right? It's 5 minutes, you're in and out. But if you can charge it in 5 minutes... to 80%.
I miss the old days where I have Nokia phones and I can just take out the battery and swap the battery in. It's a lot faster.
Nokia phone to charge it, you're going to use it for a few days. But I think Tesla is a good point because I think there are a lot of Tesla fans, obviously. And Tesla has a great product.
It's a very nice car.
Very, very nice car. But the business model is still constrained by the reality that it has to make cars to scale. And to make more cars, you need more factories and more capital investment. So if it remains an automaker, it's not as scalable as a Google and a software business. Right. But if they, like you were saying, if they're the first ones to crack autonomous driving level 5, and they kind of like license that that technology to other car makers, that's a different business model altogether.
That becomes super asset-like.
It's super asset-like, right?
That's the most difficult part to crack, right?
Yeah.
99%, only 1% left that they have not been able to
I'm
crack.
actually really excited for that.
Yeah, I mean, that's basically what most of the Tesla fans out there are betting on, right?
Yeah,
Right.
yeah. I mean, it's not just that. There's so many people competing. Like there's Waymo and there's some China companies as well.
Baidu,
Like, they're all coming to self-driving. But that's going to be a game changer if anyone cracks that first.
Yeah.
So I mean, there's a quick discussion on Tesla because I know a lot of people are interested in Tesla. And talk about multibaggers, Tesla will come up. So, but we just wanted to apply what we've discussed when it comes to scalability, the type of business model, whether it's capital intensive, and apply it to companies out there to really just kind of decide or evaluate how scalable a business really is. So I hope that gave you a little bit of insight. You can go and apply it to your own investments as well. So I think that's a pretty good wrap up of this discussion, this roundtable. So once again, if you want to look for growth, you want to look for scale, and these are the things that you're looking for. Something that's the business model is naturally scalable, and there's a long runway, and not so capital intensive. So take that into account, and of course that doesn't mean that a business model has something else is not a bad investment as well. This is what you're looking for. So I think that's a pretty good one. So once again, my name is Adam, this is Victor,
Thank
this
you.
is Rusmin. Thank you for joining us today. Once again, if you like our discussion, please hit the like button, tell us that we're doing something well and you enjoy it, and of course any comments, put them in the comment section. We'd love to have a discussion with you, and of course subscribe to our channel. Many more roundtables coming up again, and we'll see you once more.